yesterday we were discussing the fact that, of course, this whole conversation between the U.S. and China, the trade talks had been going on. These two delegations had met. And I said yesterday that, well, don't expect a whole lot to come out of that trade talk. There was a lot of optimism that a deal was going to be done. And that's why the market had been rallying over the course of the last couple of weeks, finally getting rid of that trade pressure on really companies. But mostly, remember, let's go back and talk about the importance of what happens with tariffs. Now, in the beginning of last year, in January and February, I wrote several articles about the importance of tariffs and what happens within the economy. And the assumption is that if we penalize China enough, they will completely crater, and then we'll be able to get a better trade deal so we can bring more manufacturing jobs back to the U.S., etc. And so I said, look, this is never going to work for a couple of reasons. First of all, is that companies today are no longer incentivized to manufacture in the U.S. They look for the lowest cost of labor because, as consumers, we're the problem. We want the cheapest rate of goods. So this is why we shop at Amazon. We're looking for the best deal. We want to shop stuff out. We want cheap stuff because that's what we can afford. And so in order for companies to actually provide and to produce cheap goods, well, we have to source out the lowest cost of labor. Why is that? Though the reason is the cost of labor is the single highest component of any process for any business. You go talk to any business owner, you say, what's your biggest cost for your business? They don't say rent. They don't say insurance. They don't say taxes. It's employment. The cost of labor is very expensive. Everybody wants and not only do people want a salary, they also want benefits, they want insurance, they want all these other bennies that go along with having a job. And I'm not saying that they shouldn't have it. I'm just saying that those have cost. Well, in other countries, such as China, India, others, you don't get that. You get $2 an hour, whatever it is, and there's no healthcare plan, there's no 401k plan with matching and all these other things. So it's fine that we want these things as employees in America. Look, I want them too, so don't mistake me. But understand that is a cost. So in order, if I'm producing a good that I've got to compete with, say, in this manufactured in China or South Korea or somewhere else where the cost of labor is cheaper, well, I'm going to have a problem making the profits for it. And since as investors and as individuals who own stocks or mutual funds inside of our 401k plans, we want to make sure that companies are profitable. And so in order for those companies to remain profitable, well, again, like I said, we have to source out the lowest cost of labor. So this is just, and we can actually look at several pieces of anecdotal evidence of this, is that even because of tariffs have been going on, Ford and other companies have already started shifting jobs back overseas because, again, in order to meet their profit margins, what Wall Street is looking for. And here we are, we're about to enter into earnings season. So the one thing we'll be looking at is listening to what companies are saying and looking at what their earnings and revenue are, right? So that's going to be the whole driver of the market over the next month or so. And one thing we're looking at there is what's your profitability? That's the thing. So again, tariffs are fine from a theoretical standpoint, but the person that actually winds up paying the most for tariffs or the people that are impacted the most by tariffs are consumers. And consumers today, in particular, and we talked about these stats yesterday on the show a bit, the average salary for about 50% of Americans runs about $34,000 a year. Well, it's kind of hard to maintain a living in the United States, but we have a high standard of living at $34,000 a year. So if you start talking about people that make $150,000, $200,000 a year, that sounds great, but that's about the top 5% of the entire economy. Most people don't make that kind of money. So in order to sustain and to have the lifestyle, look, everybody wants a cell phone, everybody wants internet, and we've even had administrations, the previous administration was talking about everybody should have access to the internet, everybody should have a cell phone, and it's great, but those cost money. So again, as these things have now become utilities for average Americans, well, there's the cost to that. So again, that's why people seek out the lowest cost. Tariffs impact the cost of goods sold in America, raises that cost. That cost has to be passed on. And so consumers are the ones hurt the most. So we talked about yesterday in particular is watch what these trade talks are about, because it's very unlikely that we're going to see any type of real movement out of these trade negotiations because both countries are fighting the same battle. and they're trying to get to the same position, but neither one are going to be willing to give up the most important thing, which is access to technology. China is already pulling a lot of capital out of Silicon Valley, and we're seeing an extraction of liquidity from there because of this issue of this ongoing trade and technology related issues. But yesterday, as we said, the announcement that came out, and it's disappointed the markets this morning, we're down a bit on futures, is that nothing was really accomplished. It was a lot of jawboning about trade and talk, and we're going to have a deal. And it really came out that it was a whole big nothing burger in the whole thing. And so this is going to be, but the goal, and I said yesterday, the goal is going to be trying to just get this off the front page and get this out of the way for companies, and so we can kind of get back to work. But the market saw through that pretty quickly yesterday, that there's really not much there, and this is going to be this ongoing trade and tariff. Either the president has to stop this and basically say, okay, look, we're not going to reach an agreement, we're just going to let it go and move on from there, or we're going to be continuing to fight this issue on trade and tariffs going forth into 2019. That's going to continue to weigh on profitability. Already, just in the last 2 months, there has been a very, very sharp drop in 2019 earning estimates for companies all across the board, primarily because of what's happening with tariffs, and it's impacting their business. So again, the risk to the markets, and we talked about this yesterday, and if you're watching our live stream right now, if you go to our website, lancerobertsshow.com, you can watch our live stream and actually see the charts and things that we're talking about. But if you saw, and we talked about yesterday, this rally following the Christmas Eve rout that we saw in the markets has been very sharp here over the last really couple of weeks. And we are now running up into exactly where we were back at the lows in October and November of last year. And again, that's where a huge amount of resistance is right now. And it's unlikely that we're going to make a lot of progress from here, at least over the next few weeks. But if we don't have a pickup in earnings, in other words, a better outlook from companies about earnings going into 2019, and we don't get some relaxation off of this issue of trade and tariffs, it's very likely that we're going to be retesting the lows back from December in the course of the next month or two. So again, we caution you here, be a little bit careful with your 401k plan. We've been talking about this earlier. Use this rally. This has been a very nice opportunity here to rebalance risk. We've been running higher levels of cash and fixed income in our portfolios for the last several months, and this has paid off well in terms of reducing overall risk in portfolios and helping with performance. But if you hadn't done that, and that rout in December really kind of weighed on you, this is your opportunity to clean it up. We'll come back from the break. We've got a lot of stuff to get into this morning. Of course, feel free to give us a call, 281-558-5738. You're listening to The Voice of Texas. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at lancerobertshow.com.